Hello, dear US PAC members and friends. Welcome to my podcast, which is themed as Financial Strategies for Small Business Owners. I'm Fred Hong, a managing director of Forest Hills Financial Group based in Manhattan. We have offices in New York, New Jersey, and Long Island, as well as a few other states across the country. With about 20 plus years of experience in the industry. I've been working exclusively with business owners, professionals, and executives in helping them with their personal wealth and financial planning and strategies. I'd like to present a framework or guideline for small business owners as to how they should approach their personal wealth strategies. I have to pinpoint the clear difference between what is called a business financial strategy versus a personal wealth and financial strategy, as they are really different topics or conversations. So here, I'd like to take this opportunity to cover four areas. One of the areas, the challenges that actually small business owners are facing in this regard, and also because of the challenges and what kind of situations most business owners are right in, and also as a experienced financial professional, what kind of solutions recommendations are available. And finally, I'd like to already begin by introducing the basic concepts in personal wealth management and strategies, what I call, uh, personal wealth strategies 101. All right, so let me just begin with, the challenges. I think is very easy to understand. It's very clear that most small business owners are so busy taking care of their business, working hard, long hours, and they are probably very experienced, have knowledge about the business they are in. However, because of their focus on their own business, they probably still lack some kind of knowledge about their personal wealth and financial planning. And also, they don't know what kind of resources they need to turn to. Uh, and they don't have the time or discipline to act on any of the plans they're supposed to have. As a result, the most small business owners, have no plans at all, or they are, disorganized, and sometimes, and maybe most of the time, they mix their business assets with their personal wealth, or they mistakenly rely on CPAs or accountants for personal wealth planning. And, with all these challenging situations they're in, the purpose here today is probably for me to recommend some solutions as from a professional financial planning perspective, such as, we really encourage all small business owners to take time off to attend financial literacy and education seminars, workshops, and hopefully you can do some self-study by taking advantage of the social media, and if possible, and try to work or engage with a uh, experienced financial professional, and hopefully you can set time now to begin systematic learning, planning, and act, and also, of course, to set time to monitor and review and adapt strategies along the way as your situation develop. So, as I mentioned earlier, because of the challenges, the situations, it's possible that uh, this is not your focus, and or you don't know how to do it, you don't know how to get started. Now, hopefully, with this, you can seriously begin to think about how you should approach your personal wealth uh, management and strategies. And really, now I wanted to cover the basic concepts or basic approaches in personal wealth management and financial planning. And that will be uh, about the three areas that you should really understand. The number one is, what are the three phases in wealth strategies or wealth financial planning? And what's the purpose in each phase? And what strategies are the best you should adopt? And finally, throughout these three phases, why protection is so important across all phases. So let me begin with what actually are the three phases that you need to understand in terms of wealth planning and strategies. The number one phase is the wealth accumulation phase. By a phase, I mean stage in your life. And of course, we all know that our financial life will be primarily divided into three phases. And number one is to accumulate wealth, because you work, you trade your labor to work and to earn a living. And in the meantime, you need to start accumulate or set some money out for your retirement, when at that time you need to rely on your capital to provide an income to cover all your expenses. So that's called a distribution phase. So you start with the accumulation phase, and then you end with distribution phase. And in between, there's also a transitional phase that's called a wealth transfer. And for some people, for some business owners, when you are actually ordinarily successful, and you hope to transfer your wealth to charity to your next generation, uh, you have to start also at the proper time and using proper strategies as well. So these three phases are very important for you to understand. So whenever you approach any financial product, any planning, you have to understand where exactly you're in, which phase you're in right now. And for example, if you're anywhere between 25 and 55 or even 65, that's probably the period for most people to accumulate wealth, what we call that the accumulation phase. All right. And then for most people, beginning 55 or 65 or even later, that's when your distribution phase begin. That's when you retire, you don't work anymore, and you have to rely on the capital you have accumulated to provide you with income. And then somewhere in between, mostly I would say, in most cases, between age 55 and 65 or even 70, even beyond, and that's when people start thinking about their legacy, how to transfer their wealth, or give a portion of their wealth to charities, and then allocate their wealth to their next generations, maybe their children or grandchildren, etc. So understanding these three phases are critical. Number two, not only should you understand which phase you're in, but you should understand uh, what you need to do during that phase, and what proper strategy you should adopt. So during accumulation phase, your purpose is to maximize total capital contribution and your wealth building potential. And that is what you need to understand, that you need to maximize. So what do you mean by maximize capital contribution? Number one, you have to set aside a portion of your earned income into a wealth accumulation bucket. All right. And then once you put that portion, and you have a good start. And that's when a lot of people fail to take action. They have to do that. And once they, put a portion of their money into the bucket, and then we are going to help them use three most important strategies. And number one is they have to do it not, in one setting. They have to do it over time. That's called discipline. So the number one strategy is the discipline. They have to do it every month or every quarter, every year, and they have to take a portion. That portion could be 5%, 10%, 20% or 30%, but they have to do it on an ongoing basis. They have to commit. All right. So that's very important. Discipline, is the number one strategy. And number two strategy is, once the money is in the bucket, they have to, do what we call an asset allocation. They have to really allocate that capital into different asset classes. So that would lead to our discussion in our next episode about what are asset classes. All right. And number three is tax diversification. I'm not sure if you may have heard about the tax diversification triangle, meaning that your money can be put into different tax diversified buckets. So that could be a taxable bucket, a tax deferred bucket, or tax free bucket. So you need to understand exactly what asset class, but also whether that capital is in taxable, tax deferred, or tax free buckets. So with discipline, asset allocation, and tax diversification, and if you understand all these three important strategies, that'll be very helpful during your accumulation phase. Now, when it comes to distribution, usually, as I mentioned, it could be after age 55, or after age 65, when you begin retirement. And that's when you have to, maximize your total capital distribution, meaning withdrawing money from, from all this accumulated wealth. All of the places, different asset classes. But there has to be a strategy how to maximize, meaning you keep more money in your own, in your own pocket, not having to, give out to IRS, or not having to lose the money in stock market. So that's very important. Your goal will be maximize capital distribution. And number two, because of this is retirement, and people have different, life expectancies. Some people will live really long, so you need to make sure that you have lifetime income. So lifetime income is also critical. You have to have some money in lifetime income asset class. That's also very, very, very critical. So what kind of strategies during distribution phase? Also, you need to understand three strategies. Number one is to minimize tax, all kinds of tax. Minimize your income tax, minimize your estate tax, minimize whatever tax. Even, as you know, some retirees, they move to some states where there's no state income tax. So that's part of the strategies to minimize tax. Number two, lifetime income and guarantees, which I just mentioned previously, because of our extended life expectancy. Lifetime income is very important, and the guarantee is very important, because if you have all your money in in the markets, in the stock market, and then you don't have guarantees because your capital will fluctuate, your wealth will fluctuate, will be correlated with market performance, which is not what you want. You want guarantees. So lifetime income and guarantees. Second strategy. The third strategy, because you have extended life expectancy, you also want to make sure not only you have adequate income to support your your retirement lifestyle, and also you want to make sure that the money that is still in the bucket can continue to grow. So you want to really keep a good balance between an income bucket and a growth bucket. Okay, again, these three strategies: minimize tax, lifetime income and guarantees, and balancing between income and growth are very important strategies. Number three, the transitional phase, which is basically the wealth transfer phase, as I mentioned, would be to maximize transfer of wealth to your designated beneficiaries or charities. That's a little more complicated because that would involve not only the financial products such as life insurance or annuities, and it would also involve some legal setup, such as to work with estate planning or trust lawyers to set up your own wills and trust, and and also use proper estate planning techniques to again, the purpose is to maximize the wealth transfer, to give out as much money as possible to your designated beneficiaries or your designated charities. Finally, there's a very important concept, a very important component in all these financial strategies, and that is the importance of protection in your personal wealth accumulation, as well as distribution, as well as transfer. Why? Because all we're talking about is your personal wealth planning and financial strategies. And as long as it's personal, it has everything to do with your life, your health, and there's personal risks such as your illness or disability, and property loss and premature death. All this could happen at any time, and also there's also tax and potential legal liabilities associated with all your wealth as well. So to protect properly using proper financial strategies or legal strategies across all these three phases is critically important, and that you don't have to wait, or you can't wait until you have accumulated all wealth. You have to have the protection in place day one when you follow or begin to think about your wealth planning, right? So that's pretty much about it, and that's pretty much what I would like to cover today for this episode. Hopefully, I'm going to talk to you again, and I hope I will cover more in detail in our next episode. About what will be the asset classes, tax diversification concept, saving, investing concepts, and all this detailed information I'm going to share with you. And I'm really thankful and honored to have this opportunity to share some of my knowledge and some of my experience, my understanding about personal wealth strategies and wealth planning. And thank you very much for your time. And see you next time. Thank you.